traders, welcome back to the channel. Here we have the NQ. So this is the NASDAQ future. So I've had a comment on the channel that wants me to look at NASDAQ, right? So this is the NQ futures, but anything I talk today on the NQ futures can be transferred directly to NASDAQ or the US Tech or NAS100, whatever you want to call it. NASDAQ, it's all the same price action. It's a different instrument, but the price action remains the same, right? So here we have the NASDAQ 4-hour time frame in front of us, right? So again, I've discussed this on almost every video. I'm going to quickly go over it here, where when I look at any higher time frame, so this is the 4-hour time frame. This is the higher time frame, right? So on the higher time frame, there's 4 immediate things that I want to be looking at, right? I want to be looking at our market structure. That's the first thing. I want to be looking at our dealing range. That's the second thing. So if I spell that correctly, I want to be looking at now the premium and discount arrays, or the PD arrays. And the fourth thing I want to be looking at is fair value gaps, right? So these are the 4 things that I'm going to dissect quickly on the NASDAQ, right? So people want to see the NASDAQ. So this is how I operate in every single market, be it Forex, futures, indices, even crypto. It's very, very important, and it's vital that you understand what it actually means to form a bias and to analyze the higher time frames. So here we begin, right? So this is the 4-hour time frame we have over here, and I'm going to be quickly dissecting the market structure as what's in front of you. So again, what we have over here is we have price giving us a structural high over here. So let's start over here, right? So this is the 4-hour time frame. Now on the 4-hour time frame, the structural dots, the structural highs and lows, will be in orange, right? So what we have is we have a structural high, and this structural high gives rise to a structural low, right? So this structural low, now we see a break of structure over here. So this is now the market giving us a structural break just over here, right? Every structural break has to occur with a body. It's very important you have a body break, right? And we're going to be discussing the difference between a body break and a wick break. And we're going to be discussing what the main differences are, right? But for now, you want to understand that every break of structure must occur with a body, okay? So the bodies tell the story. The wicks are essentially a liquidity trap, right? Again, we have a structural high, and this structural high gives a pullback, right? Now, this structural high over here, again, we see a break of structure over here, right? BOS, right? Boss, break of structure, right? Now, from here, price then continues up higher. So we see a structural high. And now from here, you want to ask yourself, where is the structural highs and lows, right? This is where the idea of body breaks come into it, right? So for again, we have a structural high just over here. Now, from here, it's important to understand, if I quickly draw an arrow over here, what we've seen over here is we've not actually seen, this is not a break of structure, right? So I'm going to label this as not a boss, right? And why is this not really a break of structure, right? Why is it a break of structure? Why is it not a break of structure? Well, simply because we've swept above the old high. So this here represents a sweep of liquidity. So I'll label this in yellow. So this here is not actually a break of structure, but it's just a sweep of liquidity, right? It's swept the last high. It hasn't broken it. Therefore, it is a sweep of liquidity, not a break of structure, right? This is a sweep of liquidity, right? So from here, one question I often get is, okay, yes, we have a fair value gap over here, but this fair value gap, as you can see, was not respected, right? But you could have predicted this beforehand, right? So this fair value gap was produced on the 20th of March, and we hadn't yet seen price mitigate it until the 2nd of April, right? And it was until the 4th of April that we saw it get broken officially. So you need to ask yourself, this is a liquidity sweep, not a break of structure. So this means that this low over here becomes weak. This is a weak structural low in the markets, right? Because as you can see, this structural low down here hasn't produced a high up here. This is not a high, and therefore this now becomes a weak structure. So this now becomes an area to target. So this now becomes a weak structural low just over here. And as you can see, price did go and target it. So this is not me looking in hindsight. This is how I analyze the markets every single day, right? So this is now a weak structural low. The true break of structure is down here. So this now gives rise to the break of structure, the bearish break of structure just over here, right? BOS boss, right? Break of structure to the downside. Excellent. So now from here, we Apply the same rules again, right? We still want to mark out our structure over here. So again, what we have over here, if we mark out our structure, again, remember pullback represents 2 candles, right? We want to see at least 2 candles for a pullback. So this here is what our class as a pullback. We see a structural low, we see a structural high, we see now a structural low over here. And now from here again, we see a break of structure to the upside. So this now becomes our break of structure to the upside. Couple of things to understand from here from a supply and demand perspective. Again, where are the supply zones in this case? Where are the demand zones? Right. So from here we have supply that was currently in control. This is our supply zone over here, right? So this is a supply zone simply because it's an area that's left in inefficiency over here, right? So this is a supply zone over here, which I'm going to label in gray. So this is a 4-hour supply zone that, as you can see, price did mitigate over here. So we saw mitigation, right? We saw price actually react from this zone over here. So what we saw is we saw price come into the zone, react off the zone before failing, right? So again, what we see over here is we see not only supply being broken, but we see demand holding, right? So where's the demand zone? Well, the demand zone is down here. This is the demand zone over here, right? So again, higher time frame analysis is the same on every single market you look at. So we have a supply zone over here, right? That gives a reaction and the demand zone fails it. So from here, we understand we have a supply to demand flip zone over here. So this is a supply zone, right? This is a demand zone. Let me label them a bit bigger. So this is a demand zone in D, and this is a supply zone in S, of course, supply to demand flip zone. And since then, we've had demand in control and we've had bullish structure overall. So again, not one thing to notice is that one thing you want to ask yourself is who's in control, supply and demand. And a very easy way to see this on the chart is to understand which fair value gaps are being filled and which are being violated. So as you can see over here, we have bullish fair value gaps over here. The majority of these fair value gaps are being filled and are being respected, right? Right, we see a fair value gap getting filled over here. We see bullish fair value gaps again, either getting left unmitigated, but the majority of them getting filled over here. So again, we have another demand zone that gets filled over here. So these are things you want to be looking at as a trader. So one question I often get is, how do you form a bias and what do you look for in a bias? Well, it's very simple, right? You have the 4 things I previously discussed, right? We have the 4 things. So if we quickly go over this, the 4 market pillars to understanding overall market directions, you want to be looking at market structure. You want to be looking at dealing ranges. You then want to be looking at the PD arrays. And last but not least, you want to be looking at fair value gaps, right? And you want to see which fair value gaps are being respected and which are being violated. Here we have bullish fair value gaps that are being respected, over here again. We have a demand zone that's held over here. So we have all these different zones that are being filled over here, right? So you then want to ask yourself, right, from here, what is the next stage, right? So one thing I want to point out to traders is that we've had a break of the all-time previous high over here, which is all the way back here, right? So this was the previous all-time high region. This has now, of course, been broken. So we were in an all-time high territory. Now, from here, the most important thing you want to understand, I'm sure people have seen this all over Twitter, and it's completely correct, right? Do not pick the high. Right, do not pick the high. Let the market show its hand. Let the market show supply taking control, right? So what you want to see over here, right? This was the previous all-time high. So what you want to see, number one, is you want to see bearish fair value gaps getting respected before taking any sells, right? And we see that over here in the form of a POI over here. So this again was a bearish POI. I believe it was probably a news event of some sort. Yep. So this was a bearish POI. And as you can see, this POI has now been respected, right? So this now gives rise to the potential to look for sells, right? The potential to look for sells, right? We see a bearish POI that's been respected. And notice how we have bearish POIs or bearish fair value gaps that are being respected over here, right? You're looking for a violation of fair value gaps before heading to the upside. So this here is a supply zone. We saw it fail and we saw demand in control. So this is probably one of the most important things, if nothing else, you take from this video. It's understanding you do not, under any circumstances, want to pick the high, right? The key is to understand your market structure, your dealing range. Sorry for not spelling that correctly. You want to be understanding your market structure, your dealing range, your PDRAs, and your fair value gaps, right? The secret to any market lies in those four pillars, right? So now when we go down to the lower time frame, so this is now the 15-minute time frame. Again, what do we have over here? Currently looking at the most recent market structure. So what we had is we had price giving us a 15-minute high. So this here represents a 15-minute high in the markets, right? So again, let's label this in blue. 15-minute market structure is also bullish, right? So we have a structural high. Then we have price coming and giving us a structural low down here before the ultimate break to the upside, right? Structural high. So this now represents a breaker structure. So again, when it comes to analyzing price or analyzing structure as a whole, what you are looking for is a breaker structure to the upside, followed by a potential retracement into a discount. So what do we mean by that? So again, let's take out the four secret ingredients to understanding price, right? The four secret ingredients were market structure, dealing range, PD arrays, right? And fair value gaps, right? So again, it's the same concepts on every single time frame. So how do we use this here? So the structure, of course, is bullish, we understand. The dealing range as it stands currently, so time of recording this is just before midnight on the 20th of May. So again, what we have is we have a structural high over here. So we have a structural low down here, and we have a structural high up here, right? So this gives rise to our dealing range. So our dealing range is quite simply this region over here. This region over here gives us our dealing range in price. Now, for me, the third thing we want to be looking at is the PD arrays. So the PD arrays are very simple, right? We simply project the Fibonacci from that swing low up to that swing high over here. So this swing low up to the swing high gives us our premium and discount arrays. And understanding that we have two fair value gap zones over here, right? We have one which is down here, right? This was from, I believe, a news event. I'm not sure which one. This was it wasn't news event. It was just market open from the 20th of May. So this here represents a fair value gap. Notice how this fair value gap is on the equilibrium. So it's a low probability fair value gap simply because it's on the equilibrium. Low probability meaning price is likely to break through it, right? Price is likely to break through this zone simply because it's not in a firm premium or discount, it's on the equilibrium. So we could see a range near the equilibrium before heading lower. What is a more high probability POI, or simply fair value gap, is this zone down here, right? So this zone down here is again another fair value gap, another premium and discount array, right? So from here, this is a potential M15 fair value gap, so we should mark that up in price. Now, this now is a very firmly discounted region, right? Understanding it's in the discount, it's left a fair value gap, and it's in line with the overall market intention, which is to go higher, right? So a potential market outlook, right? A potential narrative you could build is understanding, yes, our structure is bullish, marked out by this boss over here. Yes, we have a bullish dealing range, right? But understanding that one wants to sell from a premium down to discount, filling this fair value gap and potentially even filling this fair value gap before heading higher, right? So this is basically how I analyze NASDAQ, but secretly it's how I analyze every single market, understanding structure, fair value gaps, premium and discount, and dealing range, right? Understanding that the market will look to seek liquidity and fill fair value gaps, right? And if you can understand the basics of that and essentially the basics of how the interbank delivery price algorithm works, you'll be on your way to becoming a very profitable trader, right? So if you like this video, give it a like and thumbs up, and I look forward to seeing all of you in the next one.